All right, good morning, guys. Welcome to this Monday, July 21st, getting into the last weeks of July. Time is flying. Christmas is almost here. And if you don't know, there's something called Christmas in July. Trust me, it's the craziest thing. Anyway, that's right now we have a pretty light news week in front of us. It's the middle of the summer and not much is going on. Today we have leading indicators at 10. Uh, yeah, I mean, hell, Christmas in July. If you have a wife who watches Hallmark, that's Hallmark shows. Yeah, Christmas in July. It's it's pretty unbelievable. But anyway, so leading indicators coming out today at 10. But it's and tomorrow we had Jerome Powell speaking at 8:30, and that's about it for them for tomorrow. Wednesday, existing home sales, an oil report, 20-year auction on Wednesday, Thursday, jobless claims, PMI composite, new home sales, Friday, durable goods. That's it. That's it. It's not a whole lot to hang our hat on, but it's going to be a light news week. We're in the middle of summer, so expect low volume kind of trading and potential violent move in the market, violent moves, because it's as you notice, when markets, when someone leans into it and they, uh, when someone leans into it and it's not a lot of volume out there, you get violent moves, and so you can have a range bound day, and suddenly you see a move, it just reverses the whole thing, and it's literally a couple of bars, and it's just stuff you just had to protect yourself from. And the only way you do it is by keeping a reasonably tight stop in the market and not touching it. Now, the last couple of days, we may started making a new move out of the middle to the upside. We're looking at they ran it up here on Thursday, Friday. They extended a little bit in the overnight. They pulled back a little bit in the day session, but not by any means a sell-off. Right now in the overnight, we're creeping back up again. So we're slowly grinding to the upside. I think we're still in that make or break it point. They did extend. But this could also be us roll into an extension at upper edge if they can't make something out of this pretty soon. So we'll see if they can grind this higher. This, as I said, not much news to drive the market on the news front, but there's earnings season coming out, or the earnings coming out throughout the week. So it could be something happening there as well. So earnings and tariff trade deals is what dominates this month at this point now. By August 1st, not too long from now, it's going to be tariffs is going to go up in a bunch of different spots. So we'll see how the market reacts to it at that point. So right now, I would still start this from the long side of the market. We have a pretty clear spot here with low volume area at the 63.15s. I think that's the one to lean against for a move to the downside. So as long as you hold that 63.15 level, I think we're in good shape to stay with the long bias and look for moves to the upside. So starting off, looking to buy weakness at the 63.45s, the 35s. 30s and 25s down to the 12 to 15s here for rotations back up. Now, before I guess it just occurred to me, the I did switch stuff around on the websites. I went back to the YouTube for posting videos and cleaned that up a little bit. And the benefit's going to be that you don't have this monetization going on the videos. So it's going to be easier to watch stuff without having all these freaking ads popping up. They don't pay anything really worthwhile, and it's just freaking annoying that to sit through that stuff. So I just went back to non-monetized videos for everything. As you know. Anyway, the looking to buy weakness against support 63.45, the 35 to 40s, the 25. Well, this is the 30s, 25s, then 10 to 15s here. It's yeah, 10 to 15s for rotations back up. And here's your low volume area right here at the 15. So they take out that edge right below it, the 10 to 15s. I think we are back in this lower range again. And if you're going to start some selling, I mean, that's going to be the first stage. So depending a little bit how the day develops, if you just see early weakness right from the get-go and you to start knocking it down, I would be more looking to buy weakness. If you see an attempt to take it higher, making new highs and then fail, I would be a little bit less aggressive on the buying side and a little bit more inclined to look for a short setup against as they take out the support area. Because that's when they potentially could start taking this a little bit lower. So a little bit changing dynamics there. It just depends on how they start off in the day session. If you see a nice little rally up here, it may take out some resistance, starts extending, then they start failing, and they start taking out some of these lower support areas. That's when you look for a potential move to the downside. Um, if that happens, I'll try to point it out, but different ways of looking at it. So, and usually if you have up days, you usually get a little bit of weakness and then strength in the afternoon. And if you have down days, you usually get the opposite, a little bit of strength and then you start getting weakness in the afternoon. So that's kind of the dynamic we're looking for. If we just get some little bit of weakness from the get-go, and then I would be looking to buy a little bit more aggressively. No matter what happens, if they start trading below that 10 to 15 level, we're taking off that long bias and start thinking about the retracing even further down. Still looking to buy until they take down, until they take out these 68.25, that is. That's 100 points lower. But if they cross that whole range and start getting all the way down there, that's when you need to worry about capital flow and really the direction on the market. But if they knock it down into this distribution and then go back and forth in it, it's nothing much, nothing much more than a failed attempt to take it higher. So even if the range is big and it would look pretty scary for a while there, but it's not necessarily a big deal until that 62.25 to 30 comes out. That's where you really have to start worrying about the short side of the market. And so far, I can't quite see it. I mean, it's usually in July, August, September, you get a lot of volatility, like seasonal weakness, if you wish. We have an earnings season which potentially could hold it together. Um, and we have there has been a whole different spring in terms of news, in terms of stuff, events happening, especially with the big tariff thing happening early on this year. The market already had a big sell-off right before, so it could just turn out to be not that big of a deal, this seasonal weakness. So we'll see how it shakes out. So I mean, relying on just seasonal stuff like that is sometimes it works out great, but this time around, I think it may be a little bit different just because we had this big sell-off in early on, driven by news, and then we had a big bill now pass, which is going to change some of the dynamics in the economy pretty drastically. So, and that just had passed a few weeks ago. So we have stuff driving the market, which is just kind of sit on a sideline and watch it. Looking at the bonds and trading back up again, they're backing off that lower edge, and capital flow on this guy is the capital flow. They were down here testing those lower edges. You see, this is the Thursday session was pretty. They were down there, and then Friday session backed off a little bit, and now we are heading back up in this upper range. So back range bound. I would start off probably from the long side, see how far they can take it. But we are trading in the range. So right now they're just retracing back up. So I would look to initially to buy weakness against the 1310s and 113s, maybe down to the 20s, 12, 27, 28s. Below that London low, I would take off the long bias and go back in range bound. But if we're not, it's not like we are rocketing to the upside. But we are backing off a lower edge, and we are kind of in the middle of the distribution right now. So we can certainly see a move up towards the 115s here. So we got some range on the upside. So starting off from the long side, let's see if they how far they can take it on the upside. On the Nasdaq. Up there, the same story on the Nasdaq as the ES. We made a new highs, a little bit better of a move out of the middle on the Nasdaq, and they're so far holding on to the gains. They're taking out resistance. They're holding on. Friday's trading was really just a reverse retest of a support area at 160, but not a very strong reversal by any means. If they had run it down here, tested the 23,050s up to that 80, 90 level, this little edge, at that point I would be a lot more inclined to think a reverse retest, but it hasn't backed off a whole lot at all. So starting off on a long side on the Nasdaq, looking to buy weakness at the 270s, 230s, maybe 240s, yeah, 240s, 200s, down to the 160, 170s for rotations back up. And I would probably say below the 160s, if they start taking out that low of Friday, uh, I would look to buy down to the 80s. That would be the next level down, maybe 23,000s here, these two support areas on the bottom. But it's at this point below that, we're back in that lower range again, and that move out of the middle turned out to be a dud at that point. But I'm thinking that we have a pretty good shot at taking this higher. So starting off the week, light. Volume is not very much, it's pretty light so far. So we'll see if they can grind this higher. The only thing caveat, and I think I say that every year, but any time you have a new highs on light volume, just be mindful the elevator down it goes quickly. It happens quickly and it could be violent. So but so far the doldrums grind to the upside is what it feels like. So let's start from the long side. Look to buy weakness. On the way up on both the ES and Nasdaq, I'm not going to be very aggressive because we are right up here against the highs, um, and there's no point of being super aggressive on the short side. If anything, would be as they start taking out some support areas in the you see some early weakness developing. Yeah, by all means, if you want to try a short trade, that's how to be a little bit aggressive because you don't get a lot of good pullbacks to get back on that. So you may get one, but it's as you see, sometimes when they start running that lower, it just doesn't give you good entry points. Kind of had to sell the low and hope you don't get shaken out in the trade. Is almost what it looks like. So Nasdaq ES trade from the long side of the market. To get started, not going to be very aggressive on the short side. Gold and oil. Gold is a little bit to the upside. This is going to be getting close to the rollover here. It's going to be an end of July to 27 or 29, whichever it is here. I forget, but it's going to be the end of July. We're rolling into the December contract. But as you can see, gold is started to move. We are up here against that upper edge at the 3380s. And if they clear that, we are in good shape to retest that 3410s. That's going to be the next edge on the upside. Small attractor here at 3400s. So if they clear that 3485s, I would look for a run up here to the 3400s and potential short setups against the 3415s. But not going to be super aggressive on the short side by any means until we get close to that 3400 to 3410. That's when we can looking at the potential short setup on gold. And so if they start taking out the 85s, I would try to get long and see if they can run it up there to that 3400 level. So that's oil, and if they can't take out so that's gold, sorry. If they can't take out that 3485s, looking for rotation back to the mean at 3345. So we are right at that decision point if are they going to be able to bust through that thing or not. Light volume, no, not going to be. I would probably be more inclined to look for a short setup against this area right now for rotations back down. But gold, you had to be cautious about because when it moves, and as you can see here, it's kind of been a steady grind to the upside on gold. So they can certainly run it higher quite a bit before they run out of gas. So I have been not being very aggressive on gold lately because it's been so freaking volatile. And you had to looking for a good setup and a trigger before I get on that one. On oil, we are backing off a little bit further. And maybe we're starting to see the slow grind to the downside here. They've been trading in this range for a bit, building value, and getting ready for another leg lower, I think. Watch that lower edge, 64. That's the one to pay attention to. Right now, they're still range bound, so I would start off range bound on oil, look to sell strength, buy weakness. If they clear that 64 level, lean in on the short side. If they start taking out the 68.72, you should be on the long side, but that would be counterintuitive, okay? So with everything going on and lowering oil energy prices, having oil rally, it just feels kind of backwards. So Not leaning, not going to be very aggressive on the long side if they start trading back up here. So if you see rotations up, I would favor the short side against that 68.50 to 69 level. So looking for shorts again, 66.30s, 66.80s, 67.20, 67.60s, up to that 68 levels. But so a little bit of way to go to the upside. But if that starts happening, I would be looking for short setups. But that would feel counterintuitive. If a few levels up, fine. But if you start taking out the 67.50s, I think that would be starting to feel counterintuitive at that point. Looking to buy weakness, 65, not 90, but 65.60s, 65.30s, 64.60s, and 64s for rotations back up. And that would be us testing that lower edge. If they start taking out the lows at 64, hop on the short side. Could be a nice short trade here below that 65.30s for run it down to 64. I don't have any edges in between, so it could be something in between there, but I don't have anything drawn out there, so I haven't been down here for quite a while. So it could be a short opportunity here if they start taking out support at 65.60 and 65.30, these two support areas, see if they can run it lower. But I would still be looking to buy against 64.50s and 64 even for rotations back up. That's just trading failure to take out the lows. All right, so that's how we get started on oil. Range bound trading, I would favor the short side just to get started, see if they can take it lower, but we'll see how that goes. And here you have oil, here we have gold. That's popped above the 85, so they're taking that out now, and right at the open. So let's see if they can extend, or if this is just the early strength on gold. All right, so that's oil and gold. Back to the ES, and between ES and NASDAQ, look at the volume on the ES, the full size is at 70. Should be around 100, 110 or so normal. So a little bit lighter, 87 on the micro ES. So light volume to get started this week. So I would just say watch out for sudden moves in the market. If you're going to trade it, make sure you have a stop in the market and don't mess with it. And keep your stop tighter than normal if it's not a lot of volatility. So just to protect yourself. Alrighty, guys, we'll leave it there. I'll see you back at 11:30 for the next update. So good trading, guys, and let's go at it. Later.